Hey everybody, this is John, and welcome to the free video. And let's dive right in. We've got a long 3-day weekend. So what we've got here is on the Qs, we've got the weekly chart and the daily chart. Over here, we can see we've got a squeeze setting up on the daily chart. So the question is, do we blast off from here or what's going on? A couple things we want to look at here. Okay, Qs, of course, making new highs. If you look at the semis, what's happening here is the semis are not confirming. And in fact, yesterday, the semis were down while the NASDAQ was up 1%. Statistically, when that has happened, 13 out of 14 times over the next 3 to 5 trading days, the NASDAQ is down an average of 3%. So in the room today, we did some bearish trades on the NASDAQ, not making a bet that the market has topped, simply playing those stats with the idea that the Qs could come back to their 8 EMA, which isn't much of a stretch. And then same thing with the spiders is that when the Qs make new 40-day highs as they did right before the non-farm payrolls, but the S&Ps do not make 40-day highs. Same thing. The S&Ps typically 2 to 3 trading days later are down an average of 2.5%. All right, so we did the same thing there. So we got the nice little kind of a grinding rally into the long weekend. But what I'm looking for on Monday, Tuesday is some selling. Now, of course, in this market that may not happen. We may just keep rallying. But we've got our bearish butterflies. We've got our call credit spreads. We've got our bets in place. And in a perfect world, what happens is then we sell off into kind of the 8 and 21 EMA zones. We cover our bearish plays and then start looking at buying some of the stronger stocks. All right. And I'll go through a list of those in the premium video. The indexes here are kind of the easiest way to do that. But then, of course, you do have stocks, like Zoom here, of course, has been on a tear. And if for some reason during market weakness we could get a flush to the 21 EMA, which would represent a stop run, that would be fantastic. And that's certainly something that I'm looking at. Last but not least, I like the idea here of TLT. We got record new mortgage lows today, of course, as represented by the 10-year notes, but we do have a big weekly squeeze here. The volatility has come down quite a bit, and I really like the idea here of like, okay, I don't know if this is going to fire long or fire short, but we know with the weekly squeeze that a lot of energy is being built up and a lot of volatility is about to be released. And because of the low implied volatility on these options, I love the idea of buying some Delta 30 strangles out in August. So if it goes up more than the expected move, you can make some money. And if it goes down more than the expected move, you can make some decent money. And basically, you're not worried if it goes up or down. You're just betting that it's going to get more volatile. And the squeeze is telling us, guess what? It's going to get more volatile. All right. You guys have a long, fun, prosperous, relaxing 3-day weekend. And we'll see you next week.